All right, hi everybody. I thought I'd make another video to see if I can't prepare you guys a little bit better for those of you that may want to try to buy into those two stocks that we talked about in that last video. I'm going to try to make this as quick as possible, so hopefully I can get through this concisely but quickly as well. So the best place to start is here you can see that we're looking at that CleanSpark stock. And this is its last trading day. So this is last Friday. And you can see here, probably the best way to go about looking at this is where that stock ended. We kind of talked about this in the last video, where it kind of came up a little bit towards the end of the day and then it leveled off or it consolidated. So a couple of things that I didn't talk about in detail. I did mention them, but didn't get into detail as far as what these might do moving price wise. Is that a few things can happen when pre-market opens. This stock is likely to have some movement. It's probably not just going to open back up on tomorrow morning at the current price that it's at, which is $31.80. It's probably pre-market going to move around, and in fact it might shoot up quite a bit pre-market, and it might actually open the trading day when normal trading hours start at 9:30 Eastern Standard Time. It could already be at that point up to $33 or $34. And you might think to yourself, wow, it's already shot way up. What should I do at this point? Well, once the market opens, if it did shoot up, it's probably likely to drop back down. We never know. If it does drop back down, we're still going to try to treat this. I'm going to still treat this the same as it was discussed in that last video. If it starts dropping, either way, if it's already shot up pre-market and then it starts dropping when the market opens, I'm going to wait and see where it looks like it's starting to stop dropping. So when it's dropping, it's red bars. Once I see that it's starting to turn green and it's starting to come back up, I want to buy right there. I'm going to set my stop loss so that if it's turning green and I buy it, and then just like a minute later it starts dropping again, my stop loss is going to trigger and I'll just bump out and sell out of that stock, and I will have lost, as you can see here, that $7, for example. So again, pick a stop loss that you can live with, and you're not going to be, really put out if you lost that amount. So let's kind of go over some scenarios that may happen. I think we're just going to use CleanSpark, and I want you guys to basically try to apply these same theories to SunPower if you are planning on looking at SunPower as well. You can see that on Friday when this stock opened, it opened at $35 and it dropped. Let's just say that this is what we're looking at when the market opens tomorrow, and it opens at $35. Let's say it climbed up pre-market to this $35.40. All right, when the market opens, we're going to see that it's at 35 and it starts dropping almost right away. That's that first red bar. It's dropping right away. And right now we're on a 5-minute chart. So tomorrow morning when you guys start watching this, I want you to have on the 1-minute chart. We'll get into how to change those and why to change those again in further videos. But for now, I want you guys to mostly just use the 1-minute chart in the morning. It shows just kind of the most current activity and how that stock is acting. But if it starts dropping, you'll see it happen fairly quickly. If it starts dropping, you want to just kind of keep an eye on it. The second you see a green bar, that doesn't mean buy it. It means just kind of continue to watch. When you can tell that it really looks like it's starting to climb back up. And again, some of this is just going to take experience. If you guys are a little uncomfortable, just plan on buying like 1 share or 2 shares, whatever you're comfortable with, to just kind of get used to watching how stocks can move. Sometimes they can move really quickly up and down. If they start shooting up, if it starts climbing, you want to try to buy it probably right away. And again, set your stop loss so that if you buy it and it decides right after you buy it, it drops, and it does happen, you will sell that stock and you won't lose a lot of money. If you're setting those right at that time, you'll have those markers there. If you happen to see it pass your stop loss, your stop setting, you can just put your finger on that, toggle it down to below where that stock is at, and it should trigger that way. You shouldn't have to do that very often. It's something that normally works very, very well, but sometimes these stocks really can move it up and down quickly. It doesn't necessarily have anything to do with the app you're using. It just can be how fast the market moves, and if the way, for lack of a better way to put it, but this is really truly how it is if there's room in that stock for you to buy or sell. So sometimes those can be factors as to whether or not your order will fill. And by filling, I just mean that can be, it fills your buy order or it fills your sell order. But let's go back to this. So if it starts dropping here and you just see that it's going down in red. We have one, green bar, but it goes back to red. We have another, just one green bar, more or less. It goes back down to red. And then you can see it's down to that 31.07. That is where I would want to try to buy in at that point, because you can kind of see it goes green and then green again. You got 2 green bars. And 3 green bars is a really good sign. If you have 3 green bars in a row, and we'll talk again more about these kinds of things in more detail moving forward, but I can probably already tell by that second green bar that, hey, this stock is probably going to start climbing up. Those are your indicators right there. This stock is probably going to start going up. So I would have tried to buy in at that 31.07, for example. If, again, we use this exact scenario here, we would have had a stop loss. So imagine we bought in at 31.07. We should have a stop loss at, let's just say $30.07. So it's just $1 less than it's currently at. Maybe a little bit more conservative than that, because that if we buy 20 shares and it kicks us out or we lose that, we will have lost $20. I don't usually like to lose $20. So, that's something that you can kind of follow and watch, and you can move that around as you feel comfortable with. But let's just say that we bought in at 31.07. We're following this stock now. It's going up. Let me take that back. All right, so it starts going up. That's a great sign. Look, it's starting to kind of drop down, but it doesn't stop. It doesn't come close to our stop loss. Okay, so it's looking pretty good. It's climbing back up again. That's a great sign. And then as the day goes on, let me take that last arrow out of there. As the day goes on, we can see it starts dropping. And now, guess what? It's actually dropped to this point lower than we bought it at. So now it's at $30.32. Well, depending on where we have our stop loss, either we're down a little bit, or maybe depending on how conservative you were with that stop loss, it kicked you out. And then we're just kind of right back to where we are today, thinking, okay, let's watch and see what this stock does the next day, because we still want to get in on this stock. We think it's going to be a good stock long term. The other thing to kind of keep in mind is that I never am going to try to buy stocks if I think they're going to continue to go down by any means. You always want to try to do your research and buy into stocks that you expect are really only going to grow over time. They may have a bad week where, they're just down. That's fairly rare, but it can happen. But if it really comes down to it, that's part of kind of, again, the risk management, is that you expect that stock to at least go up. If it doesn't go up tomorrow, if it doesn't go up, at the end of the week, that it's going to go back up, and you will at least get your money back, for example. Again, you're going to want to have some form of a stop loss, though, so that if it keeps going down, you're not just riding that stock down. That's just a given. So basically, again, kind of going back towards the end of the day here, a couple of things would have happened. Either we'd still be holding this, and in which case, maybe not a bad scenario because, yeah, we're down a little bit at the end of the day here, where that stock ended. And actually, it ended right here. So technically, it ended at 31.80. So you can kind of see here, that's where the stock ended the day. Or really, it's after hours trading, ended at $31.80. So had we bought in at 31.07, even though it was up and things were looking good, and then over here it went way down, and we're thinking to ourselves, oh man, we just kind of, we're doing great, and then it, went horribly. Guess what? I mean, even if we did buy then and we had a stop loss set that was relatively liberal in this case, you could kind of say, it's back up here, and now we're actually back up. We're actually making a tiny bit of profit. And the hope, of course, is that, when that stock then opens the next day, that it's going to just climb, okay? And what you guys want to do is, if that stock climbs, you want to increase your stop loss. So you can reset that. So let's just say we purchased in, and instead of that saying open buy right here, let's say that, it'll say positions. Instead of open buy, it'll say position, or POS 20. And what you can do is click on your stop sell. You can click on the middle icon here. This one right there that was showing up, I'll go back to that again in a second, but it's the one with the kind of pencil and paper. You click on that, it'll bring up your orders here, and you can kind of see this is just your stop loss aspect of it. So the things that you're going to want to look at is, right now we had it set at $30 and 64 cents, as you can see right there. So we just want to change that. So now let's say we're profiting. Let's say that stock is let's say it's at $35. We want to change that number to like $34. So now if that stock starts dropping or going back down, we'll at least lock in our profits at $34. This is something that you're going to want to play with and kind of decide how you want to set those levels. Sometimes you want to give those stocks a little bit more room, because again, your hope is that maybe you can hold on to this stock for weeks or months, or as long term as you want, and just continue to watch it grow. But you always want to have some form of a stop loss, so that at the very least, hopefully you're making money. But on the off chance that stock drops, you're either setting it to a point where if it drops back to your buy-in price, that's where you're selling out, so at least you're not losing money. Or in a worst case scenario, you've lost that $7 that you were okay with from the very beginning when you bought into that stock. So hopefully that's making sense to you guys. Please comment on the videos so that I can make further videos clarifying this information. So that is, kind of more helpful for you guys. Let's kind of go back to 2 prior days here, because this is what we're hoping to see when this stock opens up on Tuesday or tomorrow morning. What we're hoping to see is that really that it kind of starts climbing like that. So you can kind of see that it starts climbing right away. So let's say we bought in right away. That's what I was trying to say. If it looks like it's going up and it's green, buy in right away. So let's say that we bought in, and we'll have to use these numbers just to make this a little bit more simple, but let's say it opens at that $35, that maybe it went up again pre-market and it's at $35.70. Let's buy in basically right at that $35.70. So it's going to go up. We're bought in at $35.70. We should have a stop loss set, somewhere, kind of more down in this area here, so that if it does drop, again, we have a stop loss set to minimize our losses. But hopefully it'll climb like we see here. And, again, don't panic, because there's always dips with the climbs. So you can kind of see here, it kind of came back down again, but it didn't go to where your stop loss would be, and then it starts climbing again. That's what we want to see. There's going to be dips in with those climbs always. And you can kind of see that this stock ended at $39.54. at its climb, which is really good. So that's what we want to see. It came back down, and again, you'll see these things are relatively common. It goes back down. You're starting to think to yourself, oh man, it's going back down. But then look, it ended the day here basically right at about its high point of the day, which is that 39.50. So that's a very common type of way that stocks move throughout the day. But in any case, hopefully, again, you guys found this video to be helpful. Hopefully this helps you to feel a little bit more comfortable and prepared for tomorrow morning if you plan to buy in on this. I'll tell you that, a lot of this movement happens pretty quickly. Sometimes this spot where it's going down. Here in this trading day, you can see that the market opened at 9:30. It looks like by 10:30 is when it hit that low point. So it took an hour to get there. It can take an hour sometimes. Normally, if it's going down, that's when you're going to kind of be sitting and watching it. If it starts going up right away, you've already bought in, hopefully at that point. The other thing I do want to say is don't chase it. So let's say that it's going up and it's going up so quickly that you just can't, you can't get your orders in fast enough. And each time you look at it, it's up another $1 or something like that. Don't chase it. You don't want to buy in finally when you're getting your order in and you're making your changes to it and whatever else, and it's already $3 up for the day. Don't buy it at that point. Watch for it to drop back down before you think you're going to buy back in. Again, yes, you can if you have your stop losses set. You never know what's going to happen, but usually once it climbs pretty decent, it's going to come back down to a degree. So don't chase things. We don't want to fall into that fear of missing out. That's what can make you make bad decisions. There's always going to be more chances to buy in on these stocks at good prices. Even if it goes up $5, you know what, it's going to continue to go up, but it's going to also have a down day mixed in with that. And that's why we are looking at these two stocks tomorrow morning, because they just had either 1 or 2 down days. So that's always a good sign. Again, hopefully this is helpful for you guys. Have a good rest of your evening, and we'll follow up on this stock buy tomorrow. I plan to hopefully record myself purchasing these 2 stocks tomorrow live, and I'll put that video out, and we'll kind of follow up and see how the trading day went and how we did. Thanks for watching.